Welcome everybody to our first Beal Capital webinar. I'm Stewart Beal, President of Beal Properties and Beal Capital. I'm with Jeff Muir, who is our Director of Acquisitions at Beal Capital, also Investor Relations, and at Beal Properties, he handles our client relations. Thanks for joining us today. I'm Stewart Beal. I'm with Beal Properties, which I started 19 years ago in 2002. We purchased our first property, 5-unit, just a block from where we're sitting today in our downtown Ypsilanti office. And from 2002 to present day, I have completed over 300 real estate transactions in multiple states, about 20 different cities, and all within about a 4-hour drive of here, but primarily in Ypsilanti, Michigan, and Toledo, Ohio. Jeff, tell us about yourself.
Yeah, Jeff Muir. I've been here about 2.5 years. Had real estate licenses in Michigan and New York, an insurance license in New York. Started with Stewart in property management, and then moved into the accounting department. And then when we started up Beal Capital, which we'll tell you more about later, I was brought in to do all those things Stewart just said. So thanks everybody for being here today. It looks like we have 60 people joining us, which is fantastic. We are recording this and we'll be putting it up on our social media, YouTube later on. So that'll be there for everyone to go back and look at again.
All right, great. We also have a chat feature. So if you have any questions, please put them in the chat. So let's dive right in. There are 3 ways to work with us at Beal Properties and Beal Capital. The first way to work with us is if you buy a real estate in the state of Michigan. We are licensed real estate brokers, and that means we can be property managers, third-party property managers in the state of Michigan. So if you buy a single-family home, a duplex, triplex, an office building, a mixed-use building, and you want to get out of the day-to-day property management and hire us as property manager, we would be glad to do that. Jeff is the contact here to get that set up. We have experience in managing all types of real estate. Our largest property we've ever managed was a 468-unit apartment complex in Ypsilanti, Michigan. It had about 30 buildings on 20 acres. We had a 7-person on-site staff at that property. And we have experience managing 247-unit, 154-unit, lots of 90 units, 75 units, 60 units. And then we just manage single-family homes as well, all within a 1-hour drive of our office. Can you tell us a little bit more about that, Jeff?
Yeah, so that's the first of the 3 ways you can work with us that we're going to talk about today. And we've been super busy on that lately. We set a goal at the beginning of this year to bring in 100 new third-party property management clients, and I think we're right on track.
It was 50. That was the goal. It sounds like you doubled it.
I doubled it. All right.
Which is fine. But yeah, basically we're right on track with the goal of 50, and hopefully we'll get a little higher than that. And one of the reasons we set this up for clients is a lot of people want to be invested in real estate but don't want to manage the day-to-day. So we employ 62 staff members. We have 9 property managers. So if you bring us a property, it will be assigned to a property manager.
Yeah, and we've been very busy on that. I think some of the people who are with us today on this webinar, we've definitely met with in person before, talked with on the phone. Just this week, we signed up new property management clients in Detroit, Novi, and Ypsilanti. I think 12 or 15 new units we're going to be managing. So like Stewart said, anybody who owns a rental property, whether it's an apartment, a single-family home, commercial space, duplex, we are happy to take that on. We manage over 1,000 of these third-party units for roughly 100 clients. Some of these clients own 20, 30 units. Some own 1 single-family home. We have one who owns a duplex, and we only manage 1/2 of that. So we're super flexible.
Yeah, okay, great. And one of the things that we do at Beal Properties is we analyze the real estate and suggest ways that we can improve the operations or increase the rent, so that our fee is actually often free to the client. So by free, what do we mean by that, Jeff?
Yeah, so by free, we have a really great track record of managing properties so that within a year, we've brought in a new tenant, maybe better qualified tenant, done some improvements on the term for the owner, are able to increase the rent to market rent. Because what we find often is when we take on management of a property and the owner tells us what they're renting it for, we're like, that seems super low, you know, because people just get busy and don't have time to do that. So let's say 6 months go by, a lease expires that we inherited, and then we bring in a new tenant, you know, touch it up a little bit, raise it up to market rent. If the year before you were getting $600 a month in rent and doing all the work yourself, you know, at that point, working with us, we might raise the rent to $850, and then you know, our typical property management fee is 8%. So basically, you're going to be getting more rental revenue in and doing none of the work, and you know that extra rental revenue covers the 8% fee.
Yeah, and because of our marketing presence, we're able to rent units quicker and for more than individual investor would be able to. And a good example of that is a single family home we took on in Clinton Township this week. The owner said, please rent this house for $1,200. We did a market analysis and determined we could rent it for $1,600. And so we are in the process of doing that. And so the investor, by partnering with us, yes, they're paying a fee, but they don't have to do any work. And so we're taking it from there.
And they're ending up with, you know, more rental income than they were previously. So, you know, how this works is we have a staff of 60 plus people, 9 property managers, 4-person accounting team, roughly 30 maintenance techs, skilled and unskilled, marketing, IT operations. So we've got the systems and the professionals in place that allow us to, you know, step right in and take care of everything that needs to be taken care of.
All right, great. So the second way you could work with us is something we're working on very hard right now, which is our real estate syndication. It's called Beal Fund 1 LP, and it's sponsored by Beal Capital. You can go to beal-capital.com to read more about it. But basically what we do at Real Estate Syndications is a lot of people invest in single family, duplex, triplex, but they don't have access in the short term to 60 units, 150 units. The 468 unit I mentioned was a real estate syndication. And so what we do is we pool investors' money together. We sell shares into the syndication of $25,000 each. And we, by pooling investors' money together, can take down larger properties. So at Beal Fund 1 on July 8th, we're purchasing a 60 unit in Monroe, Michigan. It's 100% occupied, and an investor could invest in real estate for years and never be able to invest in a 60 unit, let alone a 250 unit or a 468 unit. And so that's the benefit of a real estate syndication. And another benefit is it's a passive investment. So you can invest in our syndication and do almost no work. You have to fill out a few documents, register, and then we take it from there. We arrange for all of the debt. We track down the properties we're going to buy. We manage the properties, and it's a passive long-term investment for you. And one of the things that we do at Beal Fund 1 is we are investing in multifamily properties all within a 1-hour drive distance of our office in Ypsilanti, Michigan. So if you become an investor in Beal Fund 1 and you live in Southeast Michigan, like most of you likely do, you will be able to drive to the properties that you are investing in, and you'll be able to touch and feel them much more than you would if you were investing in stocks or other real estate syndications across the country.
Yeah, and so you mentioned Beal Fund 1, which some people on the webinar will be familiar with because we've talked to you, but can you tell us a little bit more about like the specifics of what's in Beal Fund 1?
Yeah, so Beal Fund 1, we're raising $2.5 million to invest in $10 million worth of real estate in a 1-hour driving distance of our office in Ypsilanti, Michigan. There are 4 properties that are identified in the fund. We have a 37-unit downtown Dundee. It's actually 3 historic buildings. It's 34 apartments and 3 commercial spaces. And then we have 15 unit in, a 14 unit in Toledo, Ohio called Ashland Properties. And then yesterday we bought 25 units in Toledo, Ohio. And then on July 8th, we're buying a 60 unit in Monroe, Michigan. And we've also got offers out on a 17 unit and a 54 unit, which could come into the fund. We're not quite ready to talk about those yet, but those are examples of the types of properties that we are investing in. And our goal with Beal Fund 1 is we buy a property, we increase the rents on the existing tenants a very fair amount of, on average, 3 to 5% per year. But then when a tenant moves out naturally, for instance, they're buying a house or they're moving in with their significant other, or they took a job out of state, and that apartment becomes vacant, what we do is we do value add improvements where we go in, we make the apartment nicer, and then we rent it to other tenants at market rate. And so what that does is that over time, that increases the rent roll, which, if you can keep your expenses in line, will increase the net operating income of the property, increasing the value of the property. And then once that's accomplished, we'll do a cash out refinance or sell the property into a 1031 and buy a bigger, newer property. But those are some of the things that we're trying to do at Beal Fund 1. And you can be a part of that by investing a minimum of $25,000.
All right, great. I got a couple more questions about that, but I just want to remind people who are joining us today, feel free to put questions up for us at the end of this. The last 15 minutes, we're going to answer the most frequently asked questions. I see a couple on here already, so go ahead and do that. And then another thing I wanted to ask is, so these properties that are in Beal Fund 1 that you just talked about, are these properties we know nothing about that we just bought? What's our strategy? Some of these we've managed for quite a while, so we know them well, right?
Yeah, so one thing we specialize in is purchasing off-market real estate transactions. We like to buy properties without competing with other buyers. We don't really participate in bidding wars or auctions. And so what we do is we develop relationships with the owners of real estate that we want to buy, whether it's by doing something like this. I'm sure there are people on this call that we will at some point buy a property from, sell a property from. We network, we got our social media presence, we mail letters to people. But something really special that we do at Beal is people approach us all the time with real estate that they no longer want to manage, whether it's troubled real estate, whether it's distressed, whether it's too far for them, whether they got it from a family member and they no longer want to manage it, or it's a great property and they just want to simply be done managing it. So what we do is we enter into a management contract. We manage the property for a long time, and then the seller gets really comfortable with us. They like working with us, and then at some point, whether the property is increased in value or they want to do a 1031, they ask us to buy the property from them. And often they don't think of it that way. Often they just say, hey, we're ready to sell the property. What should we do now? And a lot of times we say, oh, like, that's perfect because we really enjoy managing this property. We're doing well with it. Let's buy it. So that's a good example of the Dundee property. The Dundee property was brought to us in a distressed situation. We turned it around. And once we turned it around, it was finally in a position to be sold to someone. And the seller called around and got some broker price opinions on what the property was worth, and approached us and said, will you buy it for this price? And they were a little high, so we talked them down a little bit. We entered into an agreement that worked well for both parties. And then also the property that we're buying on July 8th is very similar. It is a 60 unit that we currently manage for the seller. So that's what we do. Right.
Yeah. So in Beal Fund 1, a lot of these units that people had the opportunity to invest in, we've been managing these for quite a while. We know them intimately, which gives us insight into knowing, how we're going to be able to project returns on it. Right.
Yeah, and that's exactly right. And so one of the things that we do, like for instance, the Dundee property. The Dundee property was a distressed situation. We actually had it about 75% turned around before we acquired it, and so we buy properties that are on an upswing. I mean, they're not all the way there. There's a lot more work to do. That's why we're getting a good price on them. I mean, the folks that we're buying from are smart guys, and they know what they have. And so we buy at a fair price without competing with other people. So in my opinion, and I think the facts have borne this out on multiple transactions, we're getting a better deal than on a marketed, aggressively marketed property. And then we're on an upswing. So we have the momentum behind us once we acquire it.
Yeah. And then, so for people who aren't familiar with real estate syndications, we often get asked questions about how's it going to impact my taxes? What are the benefits? What are some of those, fairly basic advantages to coming into the syndication?
Yeah, so real estate syndications are like you're investing in real estate yourself. You get all of the benefits of investing in real estate, but you don't have to do any of the work. So you get the appreciation, you get the depreciation, both of those. The depreciation will come on your K1. You get monthly cash flow, and you get, in our case, cost segregation, which is accelerated depreciation. And so you are getting the benefits of owning real estate without doing the work yourself. At Beal Fund 1, we have a 7% preferred return, which means investors earn a 7% return on their investment before we get paid anything. Above the 7% preferred return, we then split it 70-30. So 70% goes to the investor and 30% goes to us for putting together the syndication. We have a question here from Nina. She's asking, what are your criteria for investments? So what we're looking for at Beal Fund 1 is a cash-on-cash return of 10% soon. So by soon, I mean we acquire properties that are not cash flowing 10%, and then we fix the issue, and then in the future, it should cash flow a 10% return, and then IRR in the mid to high teens. And a lot of times we get asked what's our exit strategy. And so at Beal Fund 1, this is a long-term buy and hold fund. But what we do is we execute cash out refinances to return original capital to the investors. And then we keep the fund open and going for the long term if things are going well. And if an investor would like to exit, we can buy them out, or we can advertise their share of the investment to our investor base, and new investors can come into the fund by buying out existing investors. And we've had a good track record of doing that. We've done that 7 times before in other syndications.
All right. So anyone with $25,000 can come into the syndication?
Yeah. So to invest in our syndication, because of certain ways we're advertising the fund, you must be an accredited investor to invest in our real estate syndication. That means you need to have a net worth of $1 billion, not excluding your equity in your personal residence. And we ask people to go to verifyinvestor.com, fill that out to determine if they are an accredited investor or not. But the good thing about working with us is that you do not need to be an accredited investor to invest with us, because we have other opportunities that we do for non-accredited investors. We really value that. We feel it's sort of unfair in the marketplace that non-accredited or new investors are locked out from investing in real estate in passive ways. So we form one-off LLCs, and we invite you to be our partner in a transaction. And because you're our true partner, you have certain rights in the operating agreement under that arrangement. You do not need to be an accredited investor. And Jeff and I, we purchase 1 or 2 properties a month that we offer to non-accredited investors. We've purchased 7 so far in 2021.
Yeah, and some people on the call today with us have probably done some of the investor tours we do, but tell us a little bit more about like how that actually works if someone wants to come in. Like, what kind of property are you looking to buy to go into the one-off LLC, versus the syndication? And then, how does that work? For the syndication, we could have how many people invest? Lots.
Yeah, you could have done unlimited.
Right, and on one-off LLCs, it's a
Max of 4.
yeah. So how does that work?
Okay.
What are you looking for, and how does it work for somebody who wants to get into that who's not accredited?
Yeah, okay, great. So the way we do the non-accredited investments is we find a property that's for sale. It's usually a smaller property because small properties are not appropriate to go in the syndication. The syndication, you need something a little bigger. And we also have off-market deals that people ask us to buy all the time, mostly in Ypsilanti, Michigan. And so what we do is a seller contacts us. We enter into a contract to purchase the property. And I'll give you an example. Yesterday, or on Monday, I think a wholesaler emailed out 126 College Place in Ypsilanti, Michigan. It's a 4-unit, and a wholesaler developed a relationship with the seller. And one of our investors forwarded me. I wasn't on the wholesalers list, but one of our investors forwarded it to me. And that's where you're always networking. You're always, working with people, and you get these deals. And so it's 126 College Place in Ypsilanti. It's a 4-unit walk to Eastern Michigan University. And what we do is we enter into the contract and we form 126 College Place LLC. And to complete this transaction, it will require approximately a $100,000 equity investment from the investors, and will require a $200,000 loan. And so we arrange for the loan, we arrange for the insurance, and the equity, the $100,000 is where an investor can come in. So if you invest $50,000 into 126 College Place LLC, you will be a 50% partner in the LLC, and you'll have 50% of all the benefits of investing in real estate, 50% of the cash flow, 50% of the appreciation, 50% of the depreciation, and 50% of any cash out refinance or sale proceeds that we do in the future. And it's nice because, again, it's a passive investment, but it's also likely close to your house, so you can drive there, you can touch it and feel it. We'll do a quarterly financial report, we'll do a quarterly distribution, and if there's business that needs to be discussed as our partner, we'll do a quarterly conference call. And an investor has, we have to make unanimous decisions in 3 cases. That's capital calls, financing the property, or selling the property. And if you invest with us once in these one-off LLCs, you'll get the best deals going forward, because what we want to do is develop relationships with people that make multiple investments with us. We'd rather have 50 investors that make multiple investments as opposed to 500 investors that make one investment. Right. That's what we're doing.
Yeah. So these typically the type of person who comes in on these one-off LLCs might be someone who wants to get into real estate investing, but they started doing it. Maybe they're a doctor, maybe they're an engineer, and they realize how much time it's going to take. And so this is a way for people to get into the real estate investing world, but without all the headaches, right? Because we do a bunch of stuff.
Right. Yep. And Jeff, he is our investor relations person, and so you can shoot him questions. He'll go out, take a picture, take a video. Last night I was driving, and when I got home, I had a text from one of our investors who invested in 601 Emmett LLC, which is owns 601 Emmett in Ypsilanti. And he said, "Hey, Stewart, I'm really worried about all the flooding I'm reading about." He lives in New York, and he said, "I'm really worried about all the flooding in Michigan. What's going on with the basement of 601 Emmett?" And so that's why Jeff works closely with me. It's his job to say, "Oh yeah, let's do a report on what happened." And so we let the investor know that luckily 601 Emmett is on a street where it's sloping aggressively away from the property, and so with that one, but, you know, that's real estate, that's our job, we'll resolve that. And so we're very responsive to investors. Nina asked another question. She said, do the general partners or the sponsors invest in the syndications and the LLCs? Yeah, so in the Beal Fund 1, myself, I'm the largest investor in Beal Fund 1. I'll own approximately 20% of the fund. And then in the one-off LLCs, going back to 126 College Place, Beal Properties, Stewart Beal will never own less than 25% of one of the LLCs. The reason we do that is because we like the deals that we do. We're real estate brokers. We could definitely just buy and sell real estate and not take an interest in these properties like a lot of real estate brokers do. But actually, I really like the deals that we get into, and I want my equity exposed to those deals. The only reason we're bringing investors in is because we want to build a base of investors that are satisfied with our performance on these smaller properties, so that when we go out and see bigger opportunities, we can email this base of investors that are satisfied in our performance and wake up in the morning and just have a lineup of investors waiting to get into that bigger deal.
Yeah, and so what are the open ones right now that people could come in and invest in for these small one-off LLCs? Because I know they've been coming and we filled a couple up. What's left?
Yeah, okay, great. So we've got 126 College Place. It's a 4-unit in Ypsilanti. It requires $100,000 in cash, so you could invest $25,000 or $50,000 into that deal and take a 25% or 50% ownership in that deal. We also have 206 South Huron. That's another 4-unit. It will require about $100,000 in cash. And we have one investor in that deal who's taken a 50% position. We're taking a 25% position, and so there's room for a third person to come in for $25,000. And then we have out for signature a purchase agreement on a 17-unit in Toledo, Ohio. Because of the way real estate prices are in Toledo, a 4-unit in Ypsilanti requires $100,000 in cash, and in Toledo, a 17-unit requires $100,000 in cash. And so you could come in and invest $50,000 and be a 50% partner in a 17-unit in Toledo. It's 13 apartments on top of 4 commercial storefronts. That property is 100% occupied. And then we're close to getting into contract to purchase a 24-unit in Toledo. That will require about $150,000 in cash, slightly different property profile. And then we also made an offer on a vacant 8,000 square foot former carpet store in Ypsilanti. We're going to pay cash for that property. The purchase price will be between $250,000 and $300,000. And so we will not get a loan on that. So instead of $100,000 cash, it's going to require $250,000 to $300,000 cash to acquire that property. And so our strategy there is a little bit different. If you invest $50,000 into that deal, you'll be a 1/6 partner. But once we lease it up, once we fix the problem, which is vacancy, we'll do a cash out refinance within the first 9 months, and you'll receive about 75% of your investment back in that investment. We've got a question from Andy about vendors. So we are very, very loyal to our vendors. We are not looking for new vendors very often, but if you want to become one of our vendors, just shoot us an email and tell us what you do and in what area you work. We're very loyal with our vendors because, as everyone knows, one of the most challenging parts of real estate right now is finding good vendors. And so we reward our vendors with most of our work. So as an example, Donnie with BN Flooring, he has no joke, literally done our last 1,000 flooring projects.
I was trying to think the other night how many of those we did.
Yeah.
I asked Jeff Van Hoff, and he said maybe hundreds, but
Yeah.
it's been 1,000.
Yeah, it's been 1,000. And so we just have a set price with him for carpet, we set price with him for vinyl plank. And so he doesn't have to estimate each job. We just send him the measurement, he does it, send him the invoice. And that's an example of how we are loyal to our vendors. But Andy, if you want to be a survey guy or engineering guy for us, send us an email. We'd be glad to talk.
Yeah, and I just want to take the time right now to remind people to go to beal-capital.com, and there's a whole bunch of information on there. You can learn about how to become an investor with us. So take the time to do that. And then once you register on there also, you'll get communications from us about upcoming deals.
Yeah, okay, great. And then we have a question here from Robert. He's asking if we do PACE financing, if we do RUBS, if we charge residents for pro rata share of property taxes, utilities. And that's something we'd like to hear more about from you, Robert. If you could send us an email with what you're suggesting. I think I understand the question. The answer is no, we don't generally do it, and we'd like to hear more about it. That would be great. We also have a couple of questions from Julian. Julian asked, what would we do now? 10, 15, what do we wish we knew now that we knew 10 to 15 years ago? And the question to that is that real estate investment is the best way to create generational wealth for you and your family. I have been distracted over the years many times with businesses. I own a cafe. I own a hardware store. I have owned a landscaping company at one point. I owned a construction company for 10 years. We had 160 employees at the construction company. And all of those other businesses, in the end, were not as valuable as even just one real estate investment, to be honest. And so that's what I would wish I knew 10 to 15 years ago, is I should have just focused my career on real estate. I mean, I've done 300 real estate transactions, but maybe I would have done 400. What are the three skills and personality traits does it take to be successful? So that's a pretty wide open question. Success in life, success in business. What we preach here is to provide value in all of your relationships and provide value in all of your networking opportunities. So this question is very open-ended, and you can talk about, success in your family and, all of the things, but I'll answer it in a real estate way because we're talking about real estate. So we specialize in buying off-market deals, right? So where do we find our off-market deals? Well, we find our off-market deals by providing value to the people that we interact with. And as an example, 601 Emmett, 320 South Huron, and 206 South Huron are three properties 206 we're purchasing on July 30th, 601 and 320 we already own. And what does it take to be successful on that transaction? So I met a man named Bill. He owned the three properties. He asked us to manage the properties. I issued him a management contract, and he declined to sign it. He hired a different property manager. And I could have been really upset by that. It's in Ypsilanti. We're the best Ypsilanti guys. Bill's hiring someone else. Now I got to look at my competitors' signs on the property, so I drive by. I could have been upset. But then Bill emailed me and asked me a Ypsilanti real estate question, and I knew the answer right away, so I just typed him out a quick response. And then a month later, he asked me another Ypsilanti real estate question. I'm like, Bill, if you wanted to ask me real estate questions, why didn't you hire us to manage your property? You hired my competitor. But no, I didn't say that. What I did is I typed out the answer to this question. I knew it, so I typed it out. And then a month after that, he sent me a series of questions that would take about 45 minutes of my time. And, again, it's like, am I going to spend 45 minutes of my time to answer questions from a guy who hired my competitor to manage his real estate? And so what we do is we provide value to people, and we most often don't charge for it. So again, I spent 45 minutes researching and typing out what I thought was a really good response to him. And what happened next? A month later, he asked me to buy his three properties from him in an off-market transaction for a fair price. And that's what it takes to be successful, is provide value to people, provide value in your relationships.
The other thing I would add to that, which, comes to the employees at Beal Properties, it's just hard work. Those are the kind of people that we hire that succeed here, and why we succeed is because, and I tell people when I'm interviewing them, this is not a sit at your desk and answer 12 emails a day kind of job. It's relentless, and it's, there's a lot of people that rely on us. And so just working hard, there's, you can be super smart and lazy, and you can, just be a really hard worker who gets things done and, surpass that other person.
Yeah, and then put in the hours. So I always tell an example. When we first entered the Toledo marketplace, we were managing our Toledo properties out of the Ypsilanti office, and our leasing agent would have to drive from Ypsilanti to Toledo to show apartments in the short term before we had a Toledo office. And one time our property manager, he had a 4 o'clock showing and he had a 5 o'clock showing. The 4 o'clock didn't show up, and he said, "Hey Stewart, can I, skip out on the 5 o'clock? I've got an hour drive. I've got this to do." And I said, "Call your 5 o'clock, and if you can't reach him, you make the decision if you're going to stay or not to see if he shows up." And he called the guy. He couldn't get a hold of the guy, but our employee was a hardworking, hard charging, put in the hours type staff member, and he stayed. And the 5 o'clock showed up. He said he couldn't answer his phone because he can't answer his phone at work, so he showed up and he rented the apartment. So that's kind of another way to answer that question. And then the final question we have here is, what are the 2 to 3 most challenging aspects in your experience? And I'll answer that in a real estate way. So the question is, what are the 2 to 3 most challenging aspects in your experience? And so the challenge starts with trying to acquire real estate, and trying to acquire it in an off-market transaction where you're not bidding against people. So that's the number one transaction, number one challenging aspect. We set out a month ago to buy a 3-bedroom single-family home for a family member in Ypsilanti. We, on the first deal, offered $25,000 over asking, closed in 3 days. Our offer was rejected. And then on the second deal, we offered $25,000 over asking, cash, and closed in three days, and we came in 4th place. And then on the third deal, we offered full price. We couldn't offer over asking on this deal because the numbers just would not work. And we offered cash, closed in 3 days, and we won the deal. So that's the first most challenging. And then the second most challenging is what is challenging after you acquire the real estate, and it's hiring good staff in this environment and hiring good vendors. And both of those are very challenging, something that we at Beal Properties work on all day. So those are all the questions we have. And I think we're about ready to wrap it up, but
Okay.
what are we gonna say next? Oh,
We've
okay.
got some events coming up I want to
Okay,
tell
yeah.
people about.
Yeah, so go for it.
Yeah, so the multifamily real estate event in Brighton with Jamie Gruber and Darren Price on July 21st. We're going to be there.
Yep.
And it's for charity.
Yep.
But it's going to be an awesome real estate networking event. And so I wanted to let people know about that. Come out and join us.
You can find them in the Facebook group, Multifamily More. You can connect with Jamie Gruber there.
Yep, and then we've got a investor breakfast on July 31st at 10 a.m. in Ypsilanti. If people want to contact us and sign up for that, it's just going to be getting together, having some food, and talking about real estate.
Yeah, so it'll be a good networking session. I mean, we're ready to get back at networking events. In my career, I've been doing business for about 20 years now, and I usually attended a networking event once a week at a minimum. And so the past year's been tough on networking, and so we're looking forward to get back at it and doing breakfasts, lunches, dinners, and we'll be sponsoring those. We'll be doing about once a month, and we don't expect anything. Come hear what we're working on, learn from us. We want to learn from you, and we'll just get to know each other.
Yeah, and that's something that we didn't touch on earlier is a lot of both the third-party property management deals that we've been doing in the last 2 months here. Those come from referrals and I'll ask Stewart, how long have you known this guy? And he'll say, I met him once. I had one phone call with him. And then a year later, someone asked that person, who can help me with this? And they send them our way. So these networking events are awesome for that, just to meet people, make friends, and You know, we had one the other night in Monroe and Dundee. I've been looking for someone to do some very specific landscaping work in Novi that I haven't been able to find. And lo and behold, the guy sitting across the table from me was like, "Hey, I know someone." And, you know, so that's why these things are fantastic.
Yeah, another example, a man named Pat hired us to manage a property that he owns in Pontiac. Jeff drove out there, met with him, then he came to his land and we had lunch. We asked him to invest in a project with us, and he said he's very interested in working on doing that. But in the meantime, he introduced us to Charles, and Charles invested $50,000 in Beal Fund 1. So that's kind of the purpose of the networking we do and the breakfast, lunch, and dinners that we do. And so that's it. Thanks everyone for joining, guys, and check out our website, beal-capital.com, and then check out our Facebook page, LinkedIn, all that stuff, and let's stay connected. Thank you very much, everyone.
Thanks, everybody.